Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. In today's discussion, we look at the all-important energy market. Remember, without energy, there is no economy. As we look to 2025, where are global energy trends headed? What impact will the incoming administration's energy policies have? And where are the best opportunities for investors likely to lie? To discuss in depth, we're fortunate to sit down with the green chicken himself, the energy expert Doomberg. Doomberg, wonderful to see you again. Thanks so much for joining us today.
Adam, Happy New Year. So great to see you again. Always enjoy coming on your show, and really wholehearted congratulations to you on your success. Going out on your own was no easy thing, and to see your YouTube channel and your Substack grow, really testimony to the hard work that you put into producing such high quality content. So an honor to be back with you and looking forward to another fantastic discussion.
You're very kind. You're proving right out of the gate why you're one of my favorite people to interview, Doomberg. And it has been too long since we've had you on this channel, so I'm glad we're remedying that here. I should say, given your kind words, that to do what I do rely on the advice and support of mentors. You and the team at Doomberg are right at the top of that list. And I'll say right back at you, just in terms of the wonderful success of the platform that you built at Doomberg. It is one that has inspired me greatly, especially over this past year. So thank you for all the leadership and all the support.
It's very kind of you to say. Thank you.
All right. Well, look, enough gushing. Let's jump into this. So really, Doomberg, this could be a very organic discussion. I wanted to have you on because you have one of the most interesting ways to look at the world. And I think you have also one of the most analytical minds of the folks that I talk to in terms of how you see the world. And of course, energy plays sort of a foundational role in all that, but you look at all sorts of inputs besides just energy. But maybe let's start there. So we're talking here at the beginning of a new year. First, let's be a little retrospective. As you look back on 2024, what were the most significant developments in the energy industry to take place in your perspective?
Yeah, great question. I frame my answer with sort of three pillars. First, OPEC continued to struggle to keep a floor price under oil and is beginning to lose its grip on that all-important market. And one of the consequences of an artificially high price of oil, as kept there by OPEC, has been this emergence of natural gas and a huge abundance of it because it is being co-produced in places like the Permian to meet the marginal barrel of oil at elevated prices. And so OPEC keeping oil prices high caused there to be a deluge of natural gas in North America, so much so that at the beginning of this year, the ratio of the price of oil to the price of natural gas reached, I believe, around 50, when it should be historically between 10 and 20, and on an energy content closer to 6. And so in April, we put out a piece that I think was probably our highlight of the year, and we wrote a summary of all of our natural gas pieces at the end of December called This Year in Gas. The piece we wrote in April pointed out this arbitrage, and the piece was titled Generational Arbitrage. And we made the call that clean, extremely cheap hydrocarbons don't stay cheap forever. One of the things that has to happen is people will eventually switch their engines. And while we were focused on the North American market in that piece, and there were indeed some burgeoning signs of incremental demand for natural gas in North America, what really changed the game in the global natural gas market and kept a lid on oil prices was a wave of engine switching in China, which you and I have discussed on a prior appearance. And that made diesel prices go down, which caused crack spreads to go down, and it further proof that oil prices were held artificially high because they still stayed stubbornly above $70 a barrel. But then the third major plank beyond OPEC weakening, engine switching towards lighter hydrocarbons, there was also this third leg, which is the realization that while nuclear energy may be ideal to power the artificial intelligence revolution, in fact, the speed with which such facilities could come online is incongruent with the exponential nature of the demand for new power from that sector. And we made the call in a piece called Bridge Burning that natural gas, especially in North America, where it is still even though it's almost tripled this morning off the bottom. Um, it is still the cheapest, cleanest hydrocarbon on the board and the quickest to bring online. And so natural gas, was as low as $1.50 per million BTU at the beginning of the year. And when we made that call in April, it traded for as high as 420 per million BTU on the last trading day of 2024. It since pulled back a little bit from there at the time of this recording, but that's a pretty big move. But even at that price levels, let's just call it $4, that's still $25 a barrel oil. It's still comparatively cheap. And one wonders, given the incremental need for it in AI, whether it'll stay down there. And then a tangent to that third pillar, and then we could take any or all three of these in any direction you want to go, is that because AI has such needs, we believe that data centers are going to go off grid. And we're starting to see that because you can't have marginal demand impact everybody's price on a public good like a utility grid.
Mm-hmm.
And so I think what we're going to see are standalone pods where natural gas in places like the Permian or Alberta or British Columbia goes in one side of a building and data comes out the other. And we're beginning to see that trend as well. So the three main pillars, OPEC weakening, engine switching to natural gas, and the AI revolution being powered by that very same natural gas molecule.
Okay, so it does sort of sound like natural gas is the common element of all these three threads here. So let me ask you this. Do you think we've seen the bottom of natural gas in
Well,
2024?
certainly for in the medium term, we saw the bottom in April. The big question I have is, are we near closer to like a local top at least? Because it's been an incredible run. I'm not a trader, but when you look at the chart, things don't go, up and to the right forever, not even Bitcoin. And so much like when uranium crossed $100 a barrel, one wonders whether the cold snap that has been forecasted that is driving some of the short-term price spikes. And we should say, the industry doesn't really look at front month natural gas. They look at the forward curve 1 year out, strip price, average of the 12 months of forward prices. And that's made some pretty remarkable moves as well. But the front month, like Henry Hub, that is quoted that you see on CNBC and Wall Street Journal is very sensitive to weather. And at the time of this recording, forecasters are calling for a pretty historic deep freeze, this year's version of global warming, I suppose. And that has been a main driver as well. I don't want to ascribe it all to engine switching and artificial intelligence, but there's certainly a combination of all those things occurring in the market. And sometimes in bull markets, momentum has a way of building on itself.
Okay, so I'm going to connect some of the dots you just mentioned with some that we've talked about in previous conversations. So in a world where that really has run on oil, run on hydrocarbons, but oil has been kind of king in that world for many decades. If I've taken good notes from our previous conversations, Doomberg, you've been saying, look, at the end of the day, what really does matter is hydrocarbons and who can come up with the cheapest, most efficient, cheapest access to those hydrocarbons and the most efficient ways to use them. And you've been saying, look, America has the surfeit of abundant, cheap natural gas, and that's going to give America a competitive advantage going forward in all sorts of things. It seems like we started to see that script kind of begin to play out in at least observable fashion here in 2024. If we were in a baseball game on this trend or on this theme, what inning would you put it in terms of America's strategic use of its competitive positioning here with so much cheap natural gas?
I would probably in the fourth inning, I would say. We have a long ways to go.
So halfway through the game, though. Okay.
Well, but the game is 15 years old, so since the beginning of the shale revolution. And you also have to rope in Canada, especially if Trump gets his way. And we have we demote Trudeau to governor temporarily. But all kidding aside, Alberta and British Columbia have a tsunami of natural gas themselves. I think it's forever thus, Adam. So as we said in the piece this year in gas, to understand energy, you really only need to internalize four things. One, energy is life. Two, energy is fungible. Three, energy prices are volatile because demand for energy is inelastic because energy is life. And then four, the oil and gas producers don't have a glorious track record of discipline when it comes to chasing that next well, hoping for a big gusher. And so when you put all those four things together, the energy markets aren't really all that random anymore. The grand equilibrium state is roughly knowable in advance. Now there's wiggles, and there's extremes, and there's edge cases, and there's geopolitical upsets, and all those things are true. But in the long run, major price disparities in any of the primary fuels get closed. And because we have so much natural gas, it was trading for so cheap that it had to be, absent a Middle East war of major consequence, not that there isn't war in the Middle East today, but one that was like an all-out assault on Iranian oil facilities or something. It had to be that the forces of arbitrage would work. They always work. It might take 6 months, it might take 18 months, but they eventually work. And that's why the curve of global energy consumption is an upward sloping line from low left to upper right with a sinal wave component to it. Sure, the economic cycle and the capital investment cycle of the oil and gas industry are often out of phase. And so you end up with regional imbalances, gluts and shortages, and wild price spikes because of the inelasticity of demand. But in the long run, society will switch the engines. Arbitrage works. They grind away at such opportunities, both financial and industrial. And so people wildly underestimate how much natural gas is. We had that very pleasant debate with Adam Rosenzweig from GNR, and they were just out with another commentary that they think the Permian natural gas is rolling over, and they are certain that it is geologic. And I just profoundly disagree with that analysis. It runs contrary to everything our industry sources are telling us. There was some curtailment of natural gas for two reasons. One, it was super cheap, and producers decided to voluntarily take, dry gas producers decided to voluntarily take some off the market. There's a tsunami of supply waiting to come back on at these prices. And then two, lack of offtake capacity, first in Marcellus Shale and then in the Permian, was stunting production capacity, especially in the aftermath of the COP29 agreement to put much more focus on methane, both flaring and venting. And so absent sufficient offtake capacity, you couldn't drill for more oil, and people had to curtail for that reason. And so I think if we had the pipeline infrastructure in the U.S. To drill at where the companies want to drill, we'd be producing more. And when prices get high, they will produce more. And so there comes a point, by the way, where natural gas is sufficiently profitable that oil becomes the afterthought in places like the Permian. And so, yeah, I think we're in fact, it's not a 9-inning game. It's forever thus. It's just how the energy markets work. The demand for energy is infinite. The consumption of energy is gated by supply.
Got it. Okay, so here's where I want to go. And first off, folks, well, Doomberg, I want to confirm one point from our previous discussions, which is you referenced the debate that you had about peak oil. And generally, what I take from your point of view is that you think the availability of oil, but I hate to say oil, which is really the availability of the hydrocarbons we need to power our economy, you think is going to roughly continue its grind up and to the right, as you say, and the price is going to remain, relatively an affordable band for basically the rest of our lifetimes. Yes, there will be wiggles along the way, but you are not in any way playing a role of Cassandra saying that energy is going to get so expensive on a secular basis that it's going to limit economic growth in our projected lifetimes, correct?
Correct. We will be producing and consuming far more oil, natural gas, coal, and who knows what else by 2050. We would argue that the peak cheap oil sort of movement at its core is a huge short bet on human ingenuity. And we've proven time and time again that we will satisfy the human endeavor, which is a constant, unrelenting struggle against the forces of entropy. That defines our standard of living. All humans everywhere want a higher standard of living, and we're really smart at doing it. Nuclear, natural hydrogen, all manner of other technologies on the horizon, vastly advanced drilling, which could lead to geothermal, all kinds of things that we could talk about that we will certainly write about in 2025. You just can't bet against the human desire for a better life. And I think it's, frankly, a foolish one to make.
Yeah, and I don't want to rehash that discussion because it's nuanced. And for folks that would like the nuances, go watch the debate that Doomberg had with Adam Rosenzweig on this, and you'll get his full position on it. But where I want to go with this, Doomberg, is kind of back to my question earlier, which is you have said that America is basically sitting in a really advantageous position here as a producer of this abundant cheap gas. And we have some trading partners right next door, like Canada, that are sitting on huge amounts as well, who we are friendly with. And so we may be able to use this competitive advantage to produce at lower energy costs than other players around the world. Obviously, we can sell the excess and make money off of that. But we can also use it to our advantage in other key geopolitical priorities, one of which is AI, the AI race, right? And I believe I've heard you say that the AI race is going to be won by whoever has the access to the greatest amount of cheapest energy to be able to power their AI forward. And America may be able to do that using its natural gas advantages, as you said earlier. So, am I correct in that summarization there? And B, maybe back to my baseball inning analogy, like where is America in capitalizing off of that advantage relative to the rest of the world? Like you've said, hey, our cheap gas is already beginning to weaken OPEC's grip a bit on energy markets. It may be able to catapult us even further of other competitors in the AI race and whatnot. Where are we, early, mid-stage, late stage in capitalizing on that advantage?
Yeah, well, I think we're very early. So, like, let's be very clear. Let me give you the numbers. The U.S. produces 20% of the world's oil, something like 25 or slightly higher percent of the world's natural gas. We are sitting on the world's largest coal reserves, even though we don't burn near as much coal as we used to. So we don't mine as much as we used to, but we're still a net exporter of coal. We are still temporarily the largest producer of nuclear energy in the world by a relatively wide margin. We have pretty decent hydroelectricity resources. We have an all of the above strategy that is frankly working. And all of this is in spite of Washington, D.C., not because of it. And that's all potentially about the change with the Trump administration, which I know we're going to talk about quite extensively later. But we have enormous resources that are basically untapped. California has a huge shale deposit that nobody's even drilling and exploring because nobody assumes the politics will ever change that will allow us to do that. But that could, especially in the face of a crisis, which we don't think is on the horizon. But
let me interject just with another pearl that you often say, which is when it comes to the energy markets, it's much more easy to remove a political constraint than a geological one. Meaning 100%. You've got a field that is running dry. Not a heck of a lot you can do about that. But if you have a field that's not tapped because the government hasn't wanted to tap it, well, you get somebody else in power as a different perspective, and boom.
Well, look what's happening in Argentina with Vaca Muerta. Just give you one more example before we move on. There's vast swaths of federal land that various progressive administrations, Clinton, Obama, Biden, have decided are national monuments, which is a backdoor way to ban drilling for oil and gas on those lands. With a stroke of a pen, Trump can undo much of that. There's offshore drilling is banned all around Florida and mostly off the coasts. And there's in Alaska. I mean, we have so much untapped potential. Look, there's a whole cadre of people who want the market to believe that there's a shortage of energy on the horizon. Those tend to be the people that are long oil and gas, including the oil and gas companies. By the way, they're not keenly interested in everybody knowing just how much there is for obvious reasons. But there's plenty of it. And we're at the early stages of taking advantage of it, to your question. But look, on AI, we have a huge advantage. We have the most data centers. All the big technology companies are here. We have the most data centers by a huge margin. And we're sitting on this abundant, cheap resource. And look, for all of his idiosyncrasies, I mean, Elon Musk in Nashville kind of proved our thesis. What did he do? He basically, without getting proper permits, built an illegal natural gas plant in record time and built, one of the world's largest supercomputers to train his XAI models in something like 120 days. That's basically an off-grid way to take advantage of our abundance in a way that no other more rules-following company would ever do. But Elon's not exactly known for following
the rules.
Following the rules.
So Doomberg, is that a pilot example of your point from earlier that you expected data centers to go off grid?
And for natural gas to power, yeah, absolutely. As we mentioned it in that piece, bridge burning. That's an exception that proves the rule. Like Microsoft wouldn't do that, Google wouldn't do that, but somebody will, and Elon did, right? And so to me, that's a quintessential example of the exception that proves the rule. It was the inspiration for that piece, and yeah, so and when Trump, takes office, assuming he does, without event, the gloves will come off, and if you look at the people that he's surrounding himself with during the transition, yeah, this is all very consistent. He's got Silicon Valley, the key component of the reason why he won the race, sitting at Mar-a-Lago whispering in his ear. And he is nothing. He's many things. Trump is nothing if not pro-American manufacturing and pro-American innovation and pro-American energy production. We are literally potentially about to take a significant 180. And I would close by noting that friend is too strong of a word, but acquaintance, Chris Wright, who's a Doomberg reader and has appeared on a podcast with me, is the nominee to be Secretary of Energy. And I would say our views and his views are 95% aligned. He was the CEO of Liberty Energy, a fracking services company. He's like third or fourth company that he's successfully grown. He's an American patriot. He's an American capitalist. He's an American entrepreneur, an American success story. Understands the energy markets better than any Secretary of Energy will have understood them before taking the position. So yeah, I think we're headed to a whole different paradigm.
And he put out a maybe like a 10-minute video of sort of how he sees the energy landscape and what policies he thinks are important for America to follow. So if you want to sort of understand how Chris Wright thinks, just go on YouTube and type his name in there, and I'm sure you'll find that video pretty quickly. It'll give you a pretty good sense about how this guy sees the world. All right, so this is a great segue, Doomberg, into kind of the next theme I want to talk to you about, which is, okay, so you highlighted what was important about 2024. Where do you think all this heads in 2025? What are the things that you're going to be watching most closely? And I know that you have you place a lot of importance on January 20th. And how that's going to, basically bring a whole new playbook to the American energy endeavor. But I think you've got some sort of specific thoughts about the criticality that President-elect Trump himself plays in this equation. So why don't I just hand you the mic here and let you run?
So this is a little perhaps contrarian, but we like to analyze situations from sort of an apolitical perspective. And it occurred to us when looking at Washington, and again, we're not a political newsletter, but you cannot analyze energy and be immune to politics.
Yeah, nor can you analyze the economy and be immune to politics either. Yeah.
Right, so you don't have to be a political activist, but you do have to be politically aware. And we are seeing something interesting happen right now. So if you go back and watch Trump's Agenda 47 videos that he put out in March of 2023, it's very clear what he intends to do. All signs in this transition seem to indicate that he is going to follow what he said to the letter. And if he follows through on those things, there's going to be an awful lot of very powerful people in DC that aren't going to like it. Now, that's one. Two, there's been at least 2 assassination attempts on the man. We find the media's lack of curiosity about those events to be interesting. And so we have been telling our subscribers and mentioning on a few podcasts that we don't believe that it is as near a certainty that January 20 is going to go off without incident as the market is currently pricing. Now, it's not our base case, but it's not 99% either. And why do I say that? Well, we've developed a mental model internally. And when we develop these mental models to understand news flow, by the way, they're temporary. And we always measure their efficacy in explaining the news flow. And if we get major things wrong, then we have to change our model. But this is our current working model to understand Washington, D.C. First of all, at the federal level, I'm not talking about state and local. At the federal level in Washington, D.C., there is no such thing as the Republican Party, and there's no such thing as the Democratic Party. There are, in fact, two parties in D.C., maybe a third, but it doesn't really matter for this consequence. Those two main parties are Team D.C. and Team Trump. Chuck Schumer, Nancy Pelosi, Mitch McConnell, Mike Johnson, Lindsey Graham, they're all on Team D.C. The way to look at Trump's rise, which is fascinating, by the way, whatever you think of him, it's been a fascinating thing to watch. He has effectively executed a hostile takeover of the Republican Party at the federal level and gained access to the levers of power of the Republican Party at the state level to win the election twice. The Republicans in D.C. do not want him at the head of their party. You didn't see many of the major players at the, quote, Republican convention. Trump is the ultimate Republican in name only, but for different reasons. So you have Team Trump. You have a bunch of Republicans at the federal level who have to campaign as though they're aligned to Trump, but they're not really aligned to Trump. And if you pushed us, we would partition the House of Representatives and the Senate 85-15 percentage-wise to Team DC. The Republicans do not control the House and the Senate. Team DC does. I'll give you two data points that perfectly explain it, or at least are evidence to support our model. One, Trump's biggest antagonist in Congress is Mitch McConnell. McConnell hates the man. He's the force behind torpedoing some of Trump's nominees. He knows all he needs is 4 senators because not a single Democrat, all charter members of Team DC, of course, will vote for any of Trump's nominees. I would highlight in contrast, by the way, not a single Democrat voted against a single of Biden's nominees last time around. And many Republicans voted for many of Biden's nominees. So that's one. The other is Mike Johnson and the passage of this continuing resolution in the face of Trump's protest because there was nothing addressing the debt ceiling limitations. But if you look at that vote, it was like 85-4, all the Democrats and most of the Republicans, and then a small group of holdouts, all of whom are closely aligned to Trump. That is actually the composition of the House of Representatives right now. And Trump is in a very precarious position, which is in order for him to become president from here, the election still has to be certified by Congress, right? You have 85% Team DC who do not like Trump, who are deathly afraid of what he's trying to do. All indications are he's doing exactly what he promised to do in those videos. I would highly suggest everybody listening go back, just Google Trump Agenda 47 videos and watch the library. You'll have a far better idea of what's going on in DC. So the second data point then is I'll give you like a black swan way that Trump could potentially not become president, which again would be disastrous for our country. I think it would be disastrous for civil order. It would be a catastrophe. And for those reasons alone, not political reasons, we hope none of this happens. And again, I want to stress very carefully, this is not our base case. 10, 15% chance, but not zero. There's a scenario where, because Team Trump is mad at Mike Johnson, that Mike Johnson fails to get enough support to become Speaker of the House. Now imagine we have a protracted battle for who becomes the Speaker of the House. And it stalls in an impasse. It's not totally unprecedented. Look at how long it took to get McCarthy over the line, right? Trump can't become president until Congress certifies the election. Congress can't certify the election until the House is called to order, and the House can't be called to order until there's a Speaker elected. It's an edge case, but it's not a non-zero possibility, especially if 85% of the House is Team DC and they don't like Trump. Like, there's all kinds of theater that could happen between now and then. Now, again, I don't want to sound tinfoil, but we've had a very, very wacky year. If I would have told you that Joe Biden would have been pulled for the race because he was deemed by his own party to be insufficiently mentally capable to run, but he would remain president, and that they would install, without a primary or a single vote, Harris to be the nominee, or that two attempts at Trump's life would be made, and the media would basically just yawn and move on. Like we are in a very precarious time, and it is natural for people who exist in such times to have what's known as a normalcy bias. Nothing about what's going on right now is normal. It just isn't. And so I think investors would be mindful to at least investigate what I've been saying, see whether it makes any sense, and then watch news. So the last thing I'll say is it does not surprise me at all that today, just before we started recording this, Trump posted on Truth Social that he supports Mike Johnson to be Speaker of the House and is asking all of Team Trump to throw their support behind Mike Johnson. Now, why would that be? Well, if my model is right, the only thing Trump wants to avoid is a protracted fight until January 20th. After January 20th, maybe we reconsider. But as we say in the investment banking world and in the private markets, the deal isn't done until the wire clears. And the wire clears on January 20th, Adam, not today.
Okay, it's interesting to chew on. So, but I totally get your point, which is, hey, don't just assume, a smooth induction here. There's been enough curveballs in this whole process that there's a few more that could come. And it's generally the curveballs we don't see coming that are the ones that surprise us the most. Let's assume for a moment, though, that it does go through. Trump's installed. He's going to he's going to plow ahead on Agenda 47. What do you expect from all that next year? How does that change your calculus heading into this year versus, say, 2024?
So I think we have a complete 180 on energy, both in signaling and in policy. I think we're going to see a massive roll up in federal regulations. I think much of the permitting for new oil and gas exploration projects and data centers, for example, are going to be sent back to the states. And a couple of off-the-wall predictions, but Trump wants cheap energy for the U.S. So he's drill, baby, drill. I think because natural gas is going to be in such high demand for AI, it's not, he will lift the ban on LNG export approvals probably on day one. But it's not clear to me that they won't come back. If natural gas gets too expensive to maintain our edge domestically, there's a chance he could actually limit exports in the future. That's one that I think the market is sort of perhaps underpricing as a risk. Trump cares about cheap energy for America. He would much rather have cheap energy prices here and expensive energy prices everywhere else. But if it comes at the expense of keeping Facebook and Google and XAI and so on, keeping their lead in high-end computing, then I think that there's no way that he's going to allow this bounty of natural gas to go on a ship and power data centers in China. So there's a real chance that I think he puts a crimp on exports. But for sure, Trump wants a manufacturing boom. He wants to compete with China economically. So he wants to hurt China economically, and he wants to help the U.S. And I think many elements of the Department of Defense agree with this because we've outsourced too much of our critical supply chains to China. And I think when you look at his moves in total, something we're developing for a piece, haven't quite decided what the peg will be. The peg is the thing you hang a piece on, sort of. Right. I learned this from a reporter friend. I want to sound like I know what I'm doing in this business. So what's Trump up to? Greenland, it's filled with critical minerals that China has a stranglehold on. Canada, energy superpower, close to the Arctic, which is a real battleground. If you look at the globe from the top, not from the way we normally look at it, with North America front and center and Africa is much smaller than it is in real life. If you look at a globe from the top, suddenly you see why Trump is interested in Greenland. Because it's very much closer to Europe than the maps make it seem. When you fly to Europe, what do you fly over, right? You don't generally fly over the Atlantic, you fly over Greenland. And it's close to the Arctic, where there's a huge amount of resources and the world is posturing to get their hands on. That's one. Canada, second. Panama Canal, Chinese influence. third. I think Trump is going to pull back out of Russia, Ukraine. The only sort of thing I can't really model is his obsession with Iran. I understand why he wants to oppose China. But overall, I think sort of 80-20, Trump is bringing back the Monroe Doctrine. Like we have so much in the way of resources in the Western Hemisphere that we don't really need to be involved in the Middle East. We have already the Western Hemisphere outproduces the Middle East in oil, vastly outproduces the world in natural gas, food, fertilizer, ports, education, low-cost labor, high-skilled labor. We have it all right here. And so I think Trump is putting the pieces together for a local, sort of an isolationist light. It's not the borders of his isolationism aren't American borders, but it's the Western Hemisphere. And that's a pretty big playground with plenty to do and plenty of value to be created, and hopefully, perhaps for the first time in modern history, shared co-equally with partners in other countries and not just sort of extracted for the benefit of the wealthy.
So, got a number of questions off of this. So one is, do you see Trump as is he the businessman? Is he the Warren Buffett who has just been able to sort of see America's situation and say, "Whoa, wait a minute, there's just a tremendous amount of underappreciated advantages that we have here that we're just not using well yet or to our advantage yet, and I'm going to come and basically realize all this overlooked value for America versus previous administrations."
So it's always dangerous to analyze somebody from afar that I've never met. My impression is twofold. Trump really.
But sorry, just so you can include this in your answer. I mean, Biden could have done this.
Sure.
Bush could have done this.
Sure.
Clinton could have done this. I mean, he's clearly taking a different approach here than recent administrations.
I would say for all his faults, Clinton tried. He actually oversaw a pretty strong period of economic growth, balanced budget. Like I would give Trump full credit for reaching across the aisle, cutting deals with Newt Gingrich. Like this was a different time. That's not like today. And for all of his unsavory aspects, I'm notwithstanding, I'm just saying, like, as by these measures, which are the ones we're talking about, I would exclude Trump from Obama, Biden, even George W. Bush. So Trump wants to be liked by the common person deeply. It's like some people call it narcissism. I wouldn't necessarily call it that, but he has heard from them over the decades and seen firsthand as a business person the hollowing out of the American manufacturing base. And look, I can tell he has tapped into that in a way that no politician has ever been able to do. Like I happened to be in an area where he was holding a rally. I didn't know he was holding a rally, except for the fact that I saw a parade of middle-class people in their pickup trucks hauling Trump parade paraphernalia, big giant Trump flags, thousands upon thousands upon thousands of people enthusiastically pouring out to go watch a billionaire talk. Right now, some people think, "Oh, this is one big giant con." That's just that's a cop out in my mind. He has tapped into something that's real, and I think he has had 4 years to stew on what went wrong in 2016 and what went wrong in 2020, and to plan for what he would do if he got another shot. And you have to give him credit. Like he worked very hard in this campaign. The man is like got unbelievable energy. And he won fair and square. And he is doing, by the way, he doesn't have to stand for election again. Like that's another thing that people are forgetting. Like, so he can literally just try really hard to implement everything he wants to do. So I think what drives him now at this point, like when you're in your 70s and you're a billionaire and you've been president before, what can you be concerned about other than your legacy?
Right.
So I think that's going to be his focus. I think he's going to hit the ground, assuming again that the base case is that this happens without incident. He's going to hit the ground with a speed and political violence that will be unprecedented.
All right, I don't disagree, and there's some potential knock-on effects that I want to ask you about, but let me keep pulling at this thread here. So for those and whatever reasons, he's got this plan. He's got this different way of seeing America's geographic priorities, less what happens outside of the Western Hemisphere, more I got a lot of great pieces around me that we're not using as effectively as we could. Um, let's see where to start here. So in terms of the drill baby drill America energy boom to unleash American manufacturing and economic productivity, um, do you see him as super deregulatory and just, all right, states, you figure it all out. I'm just removing all the barriers, private market go? Or do you see this more like an Eisenhower type of moment where, where he built the national highway system, where, with some federal planning, we could create a much more sensible energy distribution grid. And I know you've written many pieces, especially like the arcane constraints right now in the natural gas distribution grid in the Northeast that make sense to nobody. But perhaps if we had a federal government saying, hey, look, this is a much more intelligent way to lay it out where everybody benefits, um, you know, we might be able to amortize that over many decades going forward. So do you think it's going to be more free market bottom up or federal government top down?
Oh, by far the former. And here's why. Trump views himself as a businessman, and he likes to talk to CEOs. He cuts deals with CEOs. And you're never going to convince California to do anything, and the feds can't impose it. You're never going to convince New England to do anything, and the feds can impose it. But what the feds can do is take their boot off of Texas, Oklahoma, North Dakota, to a lesser extent, New Mexico, Louisiana, Alaska, um, and then on federal lands, he can free the states through his relationships with business CEOs, because it's actually companies that are making these. It's pipeline companies, midstream operators, the super majors, the E&Ps. These are the ones that are going to be doing these projects. It's not the federal government. So I don't see a public works campaign on energy. And in fact, I think that would backfire. And it's just counter to his whole essence that he would propose that. He wants businesses to succeed. Come tell me what you need me to get rid of from government for that to happen. And by the way, that has the added benefit of happening much faster on sort of his watch. And I think one of the most important developments is this creation of this Energy Council that, in addition to Chris Wright, has the Secretary of the Interior on it. And the reason why the Secretary of the Interior is on it is because of this monument issue and other federal land ownership issues. I wouldn't be surprised if Trump makes a major play at giving back some of the federal lands. Don't even know how that's done. But why does the federal government own 3/4 of the Western states?
Right, right. I know people like in the Utah State Legislature
Yeah.
who are just like, why does
My-
the government
my-
own so much of our state? Yeah.
Well, Mike Lee is going to have a much bigger role to play. Senator Mike Lee from Utah, for example, on this very issue. So I think the speed and the comfort of talking to CEOs and his, frankly, disdain for federal bureaucracy is the path that he's going to go.
Okay. All right. And then uh, so comparing to another president, right? We had Jefferson where he had the Louisiana Purchase and just brought, all this tremendous new territory with new resources into America. Um, we don't necessarily have the ability to do something directly comparable to that, but there are things like with Greenland or with Canada where not necessarily we're going to annex them, but that's not out of the realm of possible. But we could certainly be working much more closely with them, especially in places like Canada, if there's a political change there. And as we're talking, Prime Minister Trudeau is sort of hanging on by a thread, and the Conservative Party is leading in the polls. So it's not inconceivable that there could be a much more Trump-friendly PM in Canada in the not too distant future. Do you see part of the strategy is not just grandstanding and making, offhand comments about Canada becoming the 51st state or, yeah, we'll buy Greenland, but real serious long-term inactions, whether they're treaties or whatever, to work much more symbiotically with local resource producers?
Yeah, I would separate Greenland from Panama and Greenland and Panama from Canada, because I think Greenland and Panama are wildly different than Canada. I think what Trump is doing with Canada is a classic old adage of negotiation. You know, Trump wrote a book called The Art of the Deal.
Right.
So when you perceive yourself to be in a competitive negotiation, there's only two rules. The first rule is always open, right? Be the opening bid. And then the second rule is open in the most wildly ambitious way to your cause as possible.
Right. So even if they walk it back halfway, it's something
Right.
still pretty darn good. Yeah.
Right. Way better than anybody would have imagined was possible. And I view Trump's, I mean, let's just call it what it is, epic trolling of Justin Trudeau. Unprecedented, undiplomatic, uncouth, many would say, in the elite circles, it can only be viewed as I want a radically different relationship with Canada, and this is my opening bid. What does he want? He wants to shut down the fentanyl trade. He wants to close the borders. He wants better deals on energy and collaboration in that regard. Maybe he wants Canada to spend more on its military. He wants, who knows? But there's something that Trump wants, and this is just the opening bid for that. And I think that's because I can't imagine that Trump honestly believes, A, that Canadians would support being annexed by America. And Canada is still part of the British Commonwealth. And we wrote a piece at the end of the year called Alberta Clipper, where we sort of described to our international subscribers who may not be all that familiar with Canada, look, the Canadian system is still very much in flux. I mean, borders are still being redrawn. Power is still trying to be shared between provinces and First Peoples and the federal government and the British monarchy. And, there's several, maybe a dozen very powerful families in Canada that tend to pull the political strings. And so it's very much unsettled. Quebec, for example, has not actually signed on to the country's constitution yet, might not ever sign on. The Quebec provincial legislature, they call it in French, the National Assembly, they say it in French, but they kind of view themselves as a sovereign within the Canadian structure. There's a simmering separatist movement in Alberta, probably 25% of the population supports becoming an independent state. So this is all very much in flux up there, and Trump is he's playing on Trudeau's obvious political weakness to embarrass him. And that's all just a opening negotiation for some bigger deal that Trump wants to cut. A renegotiation of NAFTA, like, who knows what it is. I can't read the man's mind, but that seems to me like a wildly inappropriate opening bid. That's how I would characterize that.
All right, right. So consistent with Trump. I guess where I'm going with this is, if I'm reading you right, America has a lot of undertapped energy resources, and Donald Trump is saying, I'm here to tap them, right, for America to win going forward. And perhaps even to a greater scale, and correct me if that's an inappropriate assumption,
No,
that Canada probably has even more undertapped resources that the Canadians can tap for themselves, but also that as a good trading partner, America could tap through them. And am I describing things accurately? And B, if America and Canada are able to tap them better, and most of these constraints are political ones, not geological, like we talked about earlier, so direction can shift pretty quickly on this if the political winds blow in a certain way. How big of a deal is that? Like, do you expect America Canada to, if they do indeed tap this stuff the way that Trump would like to, how big of a boom would this really unleash?
Look, you have to include Guyana, which is basically ExxonMobil.
Okay.
You have to include Argentina. Malay is basically a proxy of the U.S. at the moment, unabashedly so, proudly so. Malay, last I saw, plans to attend the inauguration, for example, in D.C. on the 20th. So when you broaden out, I think you're absolutely right, and you have characterized our view correctly, which is if the Western Hemisphere under U.S. leadership, however it's structured, Greenland, Panama Canal, Canada, Guyana, Argentina, if Brazil comes back in the fold, if Venezuela comes under U.S. influence, we haven't even talked about Venezuela, 3, 4, 5, 6 million barrels a day of potential production waiting to be extracted that used to feed all of the heavy refineries on the U.S. Gulf Coast, and could it again one day under the quote unquote right leadership. I wouldn't be surprised if Trump has a go at Venezuela early in his first term. So if we have this gusher of oil and gas in the Western Hemisphere, and by the way, the E&P companies that are doing the drilling, or the engineering firms that are doing the designs, or the midstream firms that are building out the pipelines, they're largely American. That's good for American business if we're helping the Canadians extract more of their oil and gas. We have the Exxons and the Chevrons and the super majors have their tentacles everywhere. They certainly have them in Canada and they have them in Guyana, and Argentina is a bit of a different issue, but for accidents of history. But if we do, for example, cut a deal with Greenland where they're open for business and mining companies and oil and gas companies get in there and start exploring and start developing and start building mines and start drilling for oil and gas, that's all manner of oil and gas and mining companies that are based in the U.S. that would benefit from that. So I think he just views that all as an extension of the American economic boom that he's trying to create.
Right. And I guess to my question, if he is successful in this, how transformative is this boom?
It would be, again, if he pulls it off, I mean, it would be generational. Yeah. I mean, look, we have 40 years of the wheel spinning in the opposite direction, Adam. Like, we got a long way to go before we recover everything that we've lost. I mean, I think the last 40 years, through largely forced labor in other parts of the world, low-cost labor is a euphemism for exploited labor. Why is it low cost? Do you not pay them a good salary? Do you not give them benefits? Do they not have safe working conditions? All the things we expect in the US. That's why people left. Wall Street enabled a hollowing out of US manufacturing in the name of efficiency and lower costs at the expense of the American worker. Trump wants to reverse that. Again, back to go watch the videos. Like, he couldn't be more clear about what he wants to do. He literally uses the phrase energy dominant, right? That's the phrase he uses. Take his interview with Joe Rogan. He followed what we've been saying for many years on sanctions, right? What did he say? Well, we've been saying that the way to have hurt Putin years ago was to drill, baby, drill, drive the price of oil down, and therefore Putin can't profit from energy exports and would weaken his war machine. Trump on Rogan literally said, I want to drive the price of oil to $42 because that's the break-even price for Putin's oil. So it's not like he's unaware of the mistakes we've made. And so what does that mean? So when people ask me, are you bullish on oil in 2025? We've got a guy on record saying he wants to bring oil prices below $42 a barrel. The guy happens to be pretty powerful. He's following through in every regard on the things he said. Our view is believe him.
Right. So you're bullish on oil production in 2025, but not necessarily on oil price, obviously.
Right. So I would be bullish on people who enable oil production, service providers, royalty holders, those types of companies, but not the E&Ps. Yeah, no, I mean, I would be bullish the convergence of oil and natural gas, which we have been all year, which is still happening. But yeah, you don't want to be long commodity producers in a world where the most powerful person in the world is demanding that the price of your product, by the way, you're nothing but a price taker in those markets, that needs to come down. It's the opposite of what Biden did. And so you should expect the opposite. It was great times for these companies when oil was averaging $100 a barrel, or it spiked to 125. They printed cash. That's probably not going to happen in 25.
All right. So, there's a light and a shadow to everything. I'm not trying to make this by any way a Trump cheerleader discussion here. But let me continue on this vein for a second, then we'll get to the shadow. So I think one could listen to this conversation, Doomberg, and say, wow, like, there's potential here for like a grand era for America's prospects going forward, right? Where they tap into all these undertapped resources. They achieve energy dominance. They achieve AI dominance. They unite the Western Hemisphere in a way it's never been united before. They're able to kind of maybe push out some of their geopolitical competitors here. So, tie a lot of these deals to, all right, you stop doing the deals you're doing with the Chinese, et cetera. And to your point, this could be multi-decadal. One could argue that this isn't necessarily a Republican strategy. It's something that conceivably, maybe hard to conceive right now, but conceivably the other political parties could get around. And even if we change administrations going forward, this concept of energy dominance and creating this prosperity wave, is something that America does for many decades. You can get excited about that vision, at least if you live here in America. What is the cost of that? Like, what is the dark side of that, right? Is it, hey, we've let corporate America just run wild and there's drilling rigs on every square inch of America going forward, or are there concerns about we poison the climate? Are there concerns about what happens to the rest of the world? Like, what's the cost of this?
I think the one elephant in the room, which we haven't discussed yet, is inflation. And I think that's the real potential risk. If we run too hot too quickly, even in the face of relatively cheap energy, we could see inflation pressures. And then the second elephant in the room is we're not really fiscally in a situation where we're playing from a position of strength, running huge deficits. Trump likes his numbers to go up. But this is not, and I say, we are not cheerleading Trump. We're trying to analyze it and trying to model it. And I'm trying to take the man literally based on what he has said and what he's done since he won the election. But it's inflationary, combined with this sort of fiscal dominance that we're on the edge of experiencing. And then there's another third shadow of this, which is the dark side of Doge, which is you can't really cut federal spending to the degree that he wants without triggering a recession. And so, there's a timing element of this. Yes, directionally, it's clear where the vision is going, but it's not necessarily obvious that the path function allows us to ultimately get there. There's a lot of challenges. There's political challenges. There's economic challenges. Trump is a notoriously, let's call him eccentric character. He may take wild swings in policies. And these aren't the types of swings, even from Biden to Trump, that are conducive to long-term planning on the part of multinational corporations, by the way. Like, they go from, we're going to audit you for not having enough DEI to we're going to prosecute you for discrimination because of your DEI in the matter of months based on a couple of percentage points of the popular vote. Like, that's not conducive to stability and planning, which are necessary for the shepherding of capital over the long-term horizon. There's plenty of downsides to this. It's not, it's not going to be a parade of treasure with no potential risks. I do think inflation, the U.S. fiscal situation, stock market, these are all tripwires on the path to a utopian energy abundance.
All right. Doomberg, I've got so many questions I'd like to still pull with you here. We haven't even gotten into nuclear yet. I'm going to, because you're coming up near the hour here, I'll make the audible call that we're just going to have you back on early in Q1 to keep picking up this thread, if that's all right. As we start to wrap up, can I just ask you the unfair question, given that we don't have a lot of time left? From an investor standpoint, where do you see the opportunities lie in 2025? With a relatively short timeline.
Yeah, it's still, even though the trade has run pretty far in the direction, still pretty bullish natural gas. And the natural gas producers are particularly leveraged to that price, so you have to be careful. It's called the Widowmaker trade for a reason. Bullish midstream. Midstream are the people that sort of sit between the wells and the refineries, or the wells and the LNG terminals, for example, or the wells and the NGL export terminals. They are sort of levered to volume. Any company that's levered to volume. So if you sell a pick or a shovel into a booming industry in terms of volume, you're almost guaranteed to make money. And then AI is a tough one. When we come back, maybe we can have a more in-depth discussion about that. I've spent a lot of time digging deep into it. But that's sort of more broadly. Again, all things being equal, January 20th happens. We don't have World War III. We don't have a nuclear exchange between Israel and Iran. Reshoring, big trend, and it's inflationary. So I'm actually quite bullish gold, still buying, well, holding recently because I had too much of it. Bullish real things, land, collectibles and gold. That's how we save in our sort of financial strategy. So those are the key themes, I think. But again, like January 20th is such an event horizon that I kind of just waiting for that to happen, and then we could reconsider everything.
All right. Well, why don't we do that? Why don't we have you back on soon after January 20th so you can kind of look at things with more confidence, knowing what happened then?
You bet. I'm looking forward to it.
All right. Fantastic. Well, look, a couple things as we wrap up here. One, for folks that have really enjoyed this discussion, Doomberg, don't want to wait until you're back on this channel next, but would like to go learn more and follow you and your work. Where should they go?
They should go to Doomberg.com, one-stop shop for all of the content that we produce. Our annual subscription is there, our pro tier, which includes all of our articles and an additional monthly webinar. our podcast appearances like this one are there for free for everyone to go and enjoy. And that's pretty much it. Doomberg.com. Adam, fantastic way to start 2025. I can't wait to come back. Much success for you in the new year and beyond.
Well, thank you, my friend. I will say, folks, it's really one of the best publications out there. Don't just take my word for it. There's a reason why Doomberg is the #1 successful financial Substack in all of Substack in all the world. It's very well deserved because it's such a great, fantastic publication. Doomberg, just fantastic. Thank you so much. Folks, if you please show your appreciation for Doomberg coming on by hitting that like button, then clicking on the subscribe button below, as well as that little bell icon right next to it. Doomberg, have yourself the best of New Year's and look forward to seeing you back on early in Q1.
You too.
All right, everyone else, thanks so much for watching.